Hello guys, Mike here from the Bull Capital. And this lesson we're gonna talk about levels. It's an important lesson, but this is only the basics. We're gonna learn more about them, I think, in the advanced course. So let's understand what levels actually are. So a level, so there are two types of levels, support and resistance. So I'm gonna draw just two lines here, and the resistance I'm gonna mark it with red, and the support I'm gonna mark with green. Actually, I will draw something here. Okay. Okay. So support and resistance, it's a powerful pillar in trading, and most strategy has some type of support and resistance analysis built into them. So support and resistance tends to develop around key areas that price has regularly approach and rebound thereafter. So support and resistance, it's actually levels, actually it's the base of most of the tools that you're using. For example, Fibonacci, volume or profile volume, order flows, and so on. If you see, you're gonna see that somehow you mark your levels around that. It's not a coincidence, because traders and institutions tend to buy at some specific levels. That's why you will see on volume profile or in order flows, orders there and volume, just because of that. So I don't really recommend to use like any volume profile or order flow or any other tools. Even Fibonacci, it's good, but it has some errors, because it only gives you a range, and you don't want a range, especially if you do leverage trades. It doesn't give you actually something specific. Yeah, so you're gonna have errors in your trades, and we don't want that. But if you really struggle marking some important and specific levels that we're gonna talk in the advanced lessons, then you can use volumes tools and so on, or fibs or whatever. But drawing them manually and actually understand the mechanism of how they work, you'll have better trades, and you're gonna have more accuracy, and that's what we are looking for. Now, what is support and resistance? Support and resistance, it's one of the most widely followed technical analysis technique in the financial market. It's actually a simple method to analyze a chart quickly to determine at least 3 points of interest to a trader. Yeah, the direction of the market, timing an entry in the market, and establishing points to exit the market either in a profit or a loss. So it's important, okay? Let's talk about support a little bit. So support is an area on a chart that price has dropped but struggle to break below. So for example, let's take what I draw here. So if you see, this is the price, okay? It's coming lower. And this is a support, and it touches the support, it bounce up, it's coming again, and it bounce again, okay? It hold the price. So the price drop to the area of support and bounces from this level. So in theory, support it's the price level at which demand buying power is strong enough to prevent the price going lower. Okay, it's holding the price, and that's where we should look for a buy. So as the price gets closer and closer to support, yeah, it becomes cheaper in the process. Buyers see a better deal and they are more likely to buy, and sellers become less likely to sell. Okay, it's something very rational since they are getting a worse deal. In this scenario, demand, I mean buyers, will overcome supply, I mean sellers, that will prohibit price from falling below the support. Okay? Now let's talk a little bit about resistance. So resistance, it's an area on a chart that price has risen. Okay, it's growing here, but it struggled to break above the resistance. So the price rises up to the area of resistance and bounce, okay, from this level. Resistance is the price level at which supply, I mean selling power, is strong enough to prevent the price from rising further. Okay, so what actually happened behind this is that as the price gets closer and closer to the resistance, it becomes more expensive in the process. So sellers are more likely to sell, and buyers become less likely to buy. Okay, no one want to buy there, everyone want to sell there. So in this scenario, supply, I mean sellers, will overcome demand, I mean buyers, that will prohibit price from going above resistance. Okay, so here we have buyers and here we have sellers and also supply, and here I'm gonna write demand. Okay, supply and demand. Let's change the color to red. Yes, we want to buy here and we want to sell here. Okay, so now one more thing. You might think that the more support will get tested, it will become even stronger. That's false. Okay. More likely it's gonna break down. So the more support it's getting tested, there are high chances that the price it's gonna go lower at some point. The same with resistance. Okay, if the resistance it's getting tested many times, there are very high chances to break higher. So how we draw these levels of support and resistance on the chart? Let's go to the chart actually, and we learned in the first lesson about swings. Okay, now that you know what is a swing low and a swing high, it will be easier for you to mark these levels. First of all, we're gonna use the wicks and not the bodies. It's important because you might see here a wick. Yeah, a wick is this one here, and the body is this one. You might see a wick here, but on another time frame there are actually candles and maybe bodies of the candles. And it's important why, if you leverage, so for example we mark this body here. If you leverage and a wick like this comes down, you'll just get liquidated. Okay, we want to catch this wick here. Yeah, it's safe and we make good profit. So how do we actually mark support and resistance? We are gonna look for swings high and swings low. Let's first mark the swings. Okay, so I'm just gonna start from here. So from here to here we have a swing high. So we stop at the top of the wick of the last green candle or bullish candle. Okay, I'm gonna explain in a second why. Now from this green candle, the last one, it's gonna form a swing low, and we're gonna go to the last wick of the bearish candle and we stop there. And now we have a swing low and a swing high and a swing low. Okay, I'm gonna mark swing high with green and swing low I'm gonna leave with yellow. And now a peak has been formed. If you watch the first lesson, you will understand this. Yes, a peak has been formed. And what is a peak? A peak of a swing, it's where the price stops and starts to reverse. So here we have a resistance, and we're gonna mark this peak, this wick, as a resistance, and I'm gonna mark with red. Now we have this swing low. So this is the lowest bearish candle. Yes, and from here it starts to reverse and make a swing high. Now this move form a valley, okay, as we discussed in the first lesson. We have a valley here. Now this valley, it's gonna act as support, and we're gonna mark this, and I'm gonna change the color to green. Now you see here in the future this support, it's tested, and you see how it holds the price and it bounces. Okay, and also here acted as resistance, and once this resistance has been broken, the price went higher. Now let's mark a few more levels. So once you understand the swings high and the swings low, you know where the peaks are and where the valley are, and you mark the valley and the peaks. The peaks, it's gonna become resistance, and the valley, it's gonna become support. So we have this swing high here that we marked. Okay, this is the last green candle, and this is the wick, and after this candle, a bearish candle we have. So actually here we have a swing low. It doesn't matter if it's one candle, because remember, we are on the higher time frame, and if we switch the time frame to a lower time frame, we're gonna have here multiple candles. Okay, so we have this swing low. Let's change the color to yellow. Now from here it stops and starts a swing high. Okay, this is the last green candle, and let's change the color to green. Now it formed another peak here and another valley. Now we can mark two more levels. We're gonna mark this peak here as resistance, and this valley here as support. Now you see how this level hold this price going higher. Yes, and also we see this how perfectly touch this support line. Now another important fact: a resistance, it's not broken if the body of the candle, it's not close above the level. So for example, here you see these candles that goes a little bit above the level. None of these candles actually broke the level, because there is no body candle, there is no body of the candle close above. So for example, this one close around half, also this one, so it needs to close above the level. For example, this one here has been closed above the level, and almost also this one. So this is like confirmation that it broke the resistance. So here none of these candles broke the resistance. The same is available for the support. So now let's leave only these levels and let's switch to daily, to a lower time frame, and see how it looks. Okay, so as you see, in one candle you have many daily candles. It's a swing here actually. So look how these swings move between support and resistance. Yes, also here. So we buy the support, we sell the resistance. Also here you see how perfectly touch. Levels. Now actually we draw some levels from way back, okay, from the last year. The more, so for example, these levels, the more are tested, and in the future, the less likely will be stronger or valid, because these levels most of them has been tested already. What I mean by that, I mean tested, at least it touched that level, or maybe it broke that level few times in the next 6 months, in the last 6 months. Okay, so that means it's not that valid anymore, and you shouldn't trust it too much. But as the price continue to move on the chart, it creates new levels that they has not been tested, meaning they has not been touched yet. So those levels are important and you can rely on them. An untested level, for example, here we have a level, but I'm not gonna explain why I mark this, because this is more in advanced class. Yeah, here we have a level. It's actually on a lower time frame, but so this level has not been touched until now. Okay, so this was the first touch, and look how nicely it bounced from here up. And also this level, this bounce here, we have another level here on a lower time frame that has not been tested yet. So untested level, mostly it's gonna have a big reaction when the price it's gonna touch them. But let's not go too far into this because it's more complex than that. I'm gonna remove these drawings and let's draw a few more levels on daily. Okay, on daily we have multiple swings here actually. Yes, let's start from this area. Okay, so we have a swing low. Let's start from here. So we have a swing low. let's take a bigger swing. Okay, on so any time frame lower than weekly, you're not gonna um, do what we did on weekly time frame. I mean, by stopping here on the last um, bearish candle. Okay, you can actually do bigger swings. Okay, so this is actually where the price has stopped. So you have to look the highest price in this area, which is this one, and the lowest price, which is this one, and we have a swing low. I'm gonna mark with yellow. Now from this point we're gonna make a swing high. This is the highest point. Okay, I'm gonna mark this with green. This is a swing high. Now here we formed a valley, and we're gonna mark this valley as support. Okay, now let's continue. Now from here the price starts to going lower, so we have a swing low, and this is the lowest point. Yes, this is the lowest point, and I'm gonna change the color to yellow. From this lowest point we go to the highest point, and now we formed here a peak, and we're gonna mark this as resistance, and here it formed a valley, and we're gonna mark this valley as support with red. Now let's do one more. Let's do one more swing. From the highest price we go to the lowest price, and we have another peak here, and we're gonna mark this peak as resistance. Actually let's do a few more, but because I wanna also show you some swings from the lesson from the first lesson. So actually let me make this swing lower, smaller. Okay, okay, lowest point to the highest, because normally all this you don't have if you are on a current chart. Yes, so actually you mark only what you see. From the highest point now we go to the lowest point. From the lowest point we go to the highest point. Okay, from the highest point we go to the lowest point. Yes, okay, this is a swing high with green. This is also a swing high, we're gonna mark with green color, and the yellow are swing lows. Now we can draw a few more levels. We can draw this peak here as resistance, this valley here as support, this peak here as resistance, and this valley as support. Okay, now what you see here, so because the price it's going lower, it's creating higher lows. Okay, means that this high it's lower than the previous one, and also it's creating lower lows, meaning that this low it's lower than the previous one, and this low it's lower than this one. Yeah, meaning that the price it's going down, it's in a downtrend. Now let me remove this swings line, and let's talk a little bit about the levels. So a support level can turn into resistance when it's gonna do that. So for example, you see this price here broke the support. Once the price broke the support and closed below the support, this support it's gonna act now as resistance. Okay, if the price breaks this resistance and close above this resistance, then the resistance it's gonna turn in support. Okay, so this is how you actually mark levels. Maybe some of them you don't really understand them, for example this one, because you see these candles going up and down. Maybe this one has not much value on the daily time frame, but maybe on a lower time frame it has. Let's actually let's check the 4-hour. So actually on a lower time frame it has. Okay, so this is actually an accumulation level, but we're gonna talk about this in the next lesson, the next lessons. So actually you see the price, it's actually this level it's holding down, and also here. Yeah, so if you're trading on a lower time frame, it's actually a valid level. Yeah, for example here, so this is 1 hour, and also here you see the rejection from this and it went lower. The space between a support and a resistance it's called range. Okay, it's a range because the price it's moving between these two levels. Yeah, it's called a range. So actually these are the basics of levels and how to draw them. uh, the most important levels are from the higher time frames. So for example, if I mark a level on a weekly level, it's gonna be stronger than a daily level, and a daily level it's gonna be stronger than a 4-hour level, but weaker than a weekly level. What that means, so if I mark a level on weekly, it's a weekly level. Yeah, so if I mark this here, this is a weekly level. You can actually double click on this and you can right here, so you know that this is a weekly level. Okay, let me remove some settings because okay, yeah, it shows here week. Okay, so now we know that this is a weekly level, so means that it's strong. Now if we go on daily, you see how beautiful it looks. Now if we mark let's say on daily, I'm gonna mark this level here. Yeah, we can call it daily, and now you know that it's a daily level, daily support. So weekly support, it's gonna be stronger than a daily support, and a daily support, it's gonna be weaker than a weekly support. Yes, the lower you go in time frames, the weaker the level is. Now this level, you could mark it on daily also, but it actually comes from weekly. Yes, means that it's a weekly swing. Okay, so this is a weekly swing, means that this is a weekly level. Now if we go on daily and we mark this, this is a daily swing. Okay, a daily valley, because if we go on weekly, oh actually you can see this. Okay, so this is actually a weekly. It's, yeah, I should watch it. I should watch before mark it. So okay, let's look for another one. Let's see this one. Let's check first. I want to check first. Okay, yeah, you see, so on weekly, this is not a valley. Okay, so this level, you can mark it on weekly, it's impossible, but you can mark it on daily, because on daily you have a valley here. So that means this is a daily level and not a weekly level. Okay, I hope you guys understood about levels, but we're gonna have like more lessons about levels, because it's more than just support and resistance, and it's more than that, and it's just gonna get more complex. Okay, thank you very much, and we're gonna see again in the next lesson.